I just really wanted to reinforce something that I'd mentioned last week with regards to understanding data and how to process data in your own mind to come to an actionable trading idea. Now, the way that I think of things in my head when I see data coming through on the terminal or, on Bloomberg or whatever is I'm constantly thinking of what that data point has the greatest effect on next. Okay. And I'm not talking about necessarily what's going on right now. I'm thinking, okay, next week, next month, next quarter, how is this data point affecting something? So I keep mentioning if, then. If you go back to your physics classes in, year 11, or for me, it was fifth form, there were, or maybe even earlier than that, there were things called logic gates. Now, logic gates are a fantastic mental tool. And I sort of spoke about mental models last week in one of the trading takeouts, but they're a fantastic mental tool because they enable you to really, really think in your head of these different phrases that you can quickly go and break down information with and almost create a picture or flowchart in your mind. So let's take German industrial production data today. Negative 0.7% month on month. The expected was 0.1%. So we take the negative 0.7%. It was worse than the estimated number. So what does that mean? Okay. If the industrial production data is poor and German GDP is made up of a lot of manufacturing, a lot of industrial activity, then that means because the DAX is also made up of a lot of foreign activity, then that means that German GDP is likely to wane, but also it shows that there's lack of demand externally. Okay. What does that mean? Perhaps the DAX is now a concentrated bet to look at downside on. Okay. Because the DAX is made up of 15% of foreign entities, okay, or foreign business, I should say, sorry. Let me rephrase that. The DAX is made up of 15% of domestic activity. Okay. Most of the business is done externally. So that means that global demand is waning if industrial production in Germany is faltering on a month-on-month basis. There's just loads of different ways in which you should and can construct these different ways to get to a view on a specific market, but you should always be fitting the data to the asset class, not the other way around. So don't just predominantly trade the DAX and then try and fit certain data points to it. You look at the data and then say, okay, what's the best expression of this view of this data? That's the best way to work it out. It takes a lot of effort, takes a lot of understanding of multiple different products. But once you start to get to grips with, this is how bonds interact with FX. This is how the DAX currently, because things change, the context of the DAX currently is positioned and it's very sensitive to this kind of data. These are the kind of things that you really need to get to grips with, and it will just help generally with understanding the world as well.